Nvidia, Nvidia, Nvidia. Why is everybody so dang bullish on Nvidia? Hello, traders. Yesterday we had earnings from Nvidia, the largest market cap stock in the world. In fact, its market cap is so large that it's greater than the entire GDP for Germany. It is definitely going to have a market impact. How do I know that everybody's bullish on it? Well, I did a poll in my chat room, I did a poll on Twitter, and by a 2-to-1 margin, everyone was looking for a move higher in Nvidia today. Didn't happen. You can see the stock didn't sell off very much either. So here's the daily chart on it, and you can see how it's slightly lower than yesterday's close. However, you can see how the stock is still hovering near its all-time high. The earnings were excellent. The guidance was excellent. AI is definitely driving this stock, and that is the hot theme right now for the market. Everybody is absolutely crazy about the prospects of AI. Apart from Nvidia and a few other chip makers, no one is making money on AI yet. But the prospects are there. It's the same thing that we saw in the dot-com bubble. We had lots of companies that just tacked on .com on the end of their name, and that was where the 20% rally in the stock. There were many, many companies that turned out to be fantastic. There were many that fell by the wayside. So I think the same thing will probably shake out with AI. But for right now, Nvidia is at the epicenter. There is absolutely no question that the demand for their chips is very, very high. And so we can see that the market has sold off today. So let's talk a little bit about that. We've got Nvidia's a little bit weak. Is Nvidia weighing on the market? Sure, a little bit, because we can see that it also is down a little bit this morning, but it's rebounding and it opened pretty much unchanged. So it's not having a dramatic impact, because if we take a look at QQQ, we can see QQQ is actually trading higher than where it closed. So that means that tech stocks have a bit of a bid. I'm going to go in, I'm going to show you my last pick, which was TXN. It was a Lotto trade that I did last week, and I was leaving for the weekend. It was an interesting trade. I'm going to show you what worked, what didn't work, how these trades set up. But right now, as far as the market is concerned, I'm recording this during market hours. You can see how the market pulled back, it found support, and now it's above VWAP here. What I'd like to do is I'd like to see this hold. I've got a bearish 1OP cycle. I'd like to see this bottom out and give me a bullish cycle, and then I would feel pretty comfortable buying. Got a couple of stocks that I really like right here. So let's go in and take a look at TXN, and I'm going to have to go back to what was happening last week, and that was on Friday. So I'm going to scroll back, and we'll take a look at that trade and what was actually happening. We had this nice big move up. This is where I had recorded the video. This is where I was telling you about option lottery trades and what we needed to see. The 207.50 strike price is what we're looking at, and we're going to be buying these options in the last hour of trading for a dime or 15 cents. They got down to that price, but the other criteria that we needed to have in place really didn't pan out. First of all, what we want to see when we do these trades, and again, these are very, very short-term trades, very low probability trades. So our entire focus has to be on increasing those odds. They only have an hour until expiration, so time decay is always going to be very excessive. This is a low risk trade because we're only paying 10 cents, maybe 15 cents for these options, and they are at the money, and we're looking for them to push through that strike price into the closing bell. So we want to see the stock maintain its relative strength. Well, it really didn't do that. You can see how it started to crumble towards the end of the day. So normally these searches I'm going to run about an hour before the close, hour and a half before the close, because I want to make sure that everything is lined up and I can search for those criteria. I want to make sure that I have all those criteria lined up to find the absolute best stocks that have lots of steady buying pressure. I also need a market tailwind for this trade to work out. So what would I have wanted to see with Texas Instruments? Well, this little pullback in here, I'd want to see the stock starting to gain a little bit of upward momentum as it rallied off of VWAP, and I needed to have the market. Well, the market really didn't cooperate, and I'll explain what we needed to see from the market just like I did in that video. I had mentioned to you the exact pattern that we needed to see. And so, whoops, sorry, trying to get to that particular trading session. And here it is. So we'll enlarge that. We had this big move up last Friday. Now, this is after Powell's speech in Jackson Hole. He basically said hello, and the market rallied 50 points. Okay. So the market wanted to head higher. The market feels that they're going to be cutting rates in September. It's very important because that is really the safety net for the market right now, is that rate cut in September. And you can see how the market rallied up. And here's what I was looking for. This is about where the recording came in. And I'd mentioned to you that the pattern that we needed to see was we needed to see the market continue to gradually drift lower into the close, into the last hour, and then to have a horizontal trading range. The reason that this is so important is because it gives us that springboard into the close. So yes, we were flirting with the all-time high, and we wanted to see some selling pressure in here, just enough to start getting some shorts active, because ultimately they would be squeezed on a late day rally. And so we wanted to see compression. I had mentioned to you that you're going to see a couple of long green candles, and that would entice buyers earlier than they needed to buy. And then the market would falter and slip back. Another green candle, falter and slip back. Ultimately, the pattern that we're looking for is this compression just above VWAP. And we wanted to see a candle just like that. So you can go back and watch the video. I'd mentioned to you, it's going to be the candle that looks like we're getting a breakdown, because that's really going to excite shorts. And they're going to see this long red candle here and go, oh, that's it. We're selling off. This is legitimate. Short. And then right as that candle closes, you have buying come in. And then the next candle will be green. That would be your entry point for these Lotto trades, but it needed to come all the way back here in the last hour of trading. And it's critical because this exhausted the rest of the energy that the market had. Okay, this little early pop right here tried to challenge the high. This is a lower high double top. No bueno. And now you start to see that selling pressure into the close. So we needed to see this linger longer in the day, and then have that bullish hammer. And then we had a chance to break out of that compression. If we had that type of price action, and if Texas Instruments would have done the same thing to linger, and then have that final thrust higher, buying these options for $2 or for 10 cents or 15 cents, and having the stock rally to, in this case, 108.62. Those are $1 in the money. That would have been a fantastic winner if you're buying them for a dime or 15 cents. Didn't happen. We didn't get the pattern. So I do need to mention one other thing on lottery trades. First of all, we're working on the probability side of it. Low risk, high potential reward. So that part of the equation is nice. It's the low probability part that is not good. So we have to work. We have to be super patient. We don't always get the setup that we're going to want. In fact, most of the time, we don't. And that's where most traders fail, is they want to trade, they want to gamble. So they're going to find lotto trades that don't pan out most of the time. Well, I don't like pissing my money away. Lottery trades, these option lottery trades, they are a minuscule, tiny part of our trading, not even 1% of our trading, but it is kind of a fun way to finish the week, because you can have options that double or triple in price. And we've seen that a lot of times. And so, as I'd mentioned, the one tactic that we use, because you've only got an hour left of trading and the stock's moving all over the place just before expiration, is that you set a target for a double. And once you hit your first target for half of the position, that means you've got a free trade on and you can ride the rest of that position without any concern of what happens to the market or the underlying stock, because you're going to have market volatility as well. So anyway, lottery trades are a really nice way to finish the week. I would say maybe 1 out of 4 weeks they set up. The other 3 out of 4, they don't set up, just like last week. But I felt like we had a possibility for the market to have a late day surge, especially after the price action that we had seen earlier in the day. This, up to a new high, told me that yes, we could see a nice closing rally to a new all-time high as we went into the weekend. So let's talk a little bit about the market. Let's get away from the option lottery trades. The final note on that is that it is the epitome of option trading and making sure that you have all of the conditions and all of the variables lined up. All of the tumblers are together and they've opened up that opportunity, but you have to have them all. You can't have some of them or the lock won't open. So let's take a look at what the market's currently doing. We did see some resistance yesterday, and here's what it looked like. So we bumped up against the all-time high and couldn't get through and couldn't get through and couldn't get through. And we saw this selling pressure in here. So the longer that this persisted, the more likely we were to get a little washout. Well, that washout tested VWAP, and then we bounced right off of it and actually made another new high. These long candles, these long breakouts, you have to be very careful of. So this is going to trigger buy stops for anyone who's been shorting, because they're all going to be placing their stops just about at the high. And as soon as the market breaks through it, they have to cover their positions. You trigger those buy stops and it fuels the market higher. So you cannot and should not trade this long candle. You have to see if it's legitimate. And so if you have a little retracement into it and then follow through in a new high, awesome, it's legitimate. But oftentimes what will happen is you won't get that follow through. And in this case, you had another drop. So this is some selling pressure. So the market gaps up and we see those sellers come right back in. And we can suspect that we're going to see that type of price action because the market is not doing a whole lot of anything right now. Tiny bodied candles. Now, the one thing that we can say is that all of these dips have been brief and shallow, and all of them have eventually led to buying. So dip, buy, dip, buy, dip, buy, dip, buy. So that's kind of the mode that we're in right now. You should be in dip buying mode because the market is trending higher in a very lackluster fashion. And we have a fairly light calendar right now. Today, initial jobless claims, 229. 235 was last week's number. I had expected that we could see a little bit hotter number this morning, maybe 240, maybe 245. That would have been problematic because it would have shown that the short-term trend for initial jobless claims has been moving higher. It would have been a problem only in so much as it would impact next week's unemployment report, which comes out Friday. That would have given us a clue that maybe that jobs report's going to be fairly weak. Right now, 229 looks pretty good. One caveat to that is that why haven't initial jobless claims been going up the last 3 months? We know that May's number and June's number were revised way down. July's number, 77, 73K, that was light. Why haven't initial jobless claims been going up? When people lose their jobs, they file for unemployment. So I don't trust the number. It's not consistent with what we're seeing in the actual jobs report. So take it for what it's worth. You can do all the fundamental analysis you want. GDP, by the way, came in a little bit better than expected this morning. 3.1% expected. 3.3 is where it came in. Okay, that's decent. Tomorrow we get look at the PCE deflator. But in general, the news is out this week. Nvidia was the big news. And we had GDP this morning, and we had the initial jobless claims number. We're heading into a 3-day weekend. I don't think you're going to see a lot happening today or tomorrow. The market is near the all-time high. Yes, with Nvidia being able to tread water, I think that anybody in tech stocks is breathing a little bit easier. They were hoping that there wouldn't be a lot of profit taking. And right now we've got the market bouncing back. It's above VWAP. Dips have been what you want to buy. Yes, I would say I would be leaning long side here. So I'm going to show you a trade I did today, SOUN. In fact, I highlighted this trade a couple of weeks ago. I like the stock. I like it a lot. And my analysis here was, okay, you've got this stock up in here. Would you buy this stock on that breakout after earnings? Would you buy it at that breakout? If the answer is yes, then you would sell the 13 puts. I sold the $13 puts for 60 cents. They expire tomorrow. Uh-oh, looks like you're going to be buying stock at $13. Well, I'm willing to do that. In fact, my net cost is going to be $12.60. I think I sold them for 40 cents. In any event, yes, I'm a willing buyer at that price. They're underwater just a little bit. This morning, on this bounce off of the 50-day moving average and with the 100-day moving average just below, I sold the September 2 weeks out $12 puts, and I got 63 cents for them. So this is a way that I'm accumulating a stock position without taking a lot of risk, taking advantage of that time premium decay and taking advantage of that inflated time premium and wanting to buy the stock that has had nice upward momentum. It's above all the major moving averages. It had this beautiful breakout after earnings. I like the stock. I want to buy it. It's a great way for me to generate some income and to enter a swing trade at a good price. I'm going to show you a couple of other stocks. Actually, I'm going to show you one other stock that I like. It's AEVA. I have highlighted this stock previously, and it was up in here, and we used a similar tactic where we sold out of the money puts way up at the $30 strike price, and the stock pulled back. I loved this type of climb. That tells me that buyers are engaged. Stock got ahead of itself. So no, I wasn't going to be buying it up here, but would I buy it down at AVWAP-E? Sure. So I sold those puts. They expired worthless. And yes, they were in the money briefly. And then the stock rallied just before expiration. I didn't resell them because we had an earnings announcement coming up. So it's not like I could have sold 1 week out or 2 week out options. I had earnings coming up and I never hold a position after earnings. Well, stock starts to sell off. Earnings come out. Stock continues to sell off. This stock is hot, okay? There are a lot of buyers who like it, but it got ahead of itself, and now it's been able to form a base, and you can see how the 100-day moving average is well below this horizontal base, and now the stock is actually above AVWAP-E. I like that. Would I buy it right here, right now? Yeah, I kind of do like the stock. I like it today, and especially because the market was down and the stock was higher. But there's a better approach. You can sell the $14 puts that expire in September 19th expiration for 95 cents. Excuse me. Those are the $15 puts in September. You can sell them for 95 cents. And that would put me long if I'm assigned at AVWAP-E. Great. AVWAP-E comes into play at $14.03. So would I buy the stock back here knowing that this base is solid, it's above the 100-day moving average, and that the stock has buyers because it's been able to rally above AVWAP-E? If the answer is yes, then that's a really nice trade, because in 3 weeks, if I put up $7, I'm going to take in 1. You can figure the return on that's probably somewhere in the 15% range for a trade that spans 3 weeks. Love it, especially with the market not really going gangbuster in one direction or the other, to be able to sell put premium right now and let time decay work in my favor and generate a nice return like that of 15% in 3 weeks. I'm all over that kind of play. When might I buy AEVA? Well, there's a little bit of a compression breakout right here. You could have gotten long, but ideally above the 100-day moving average. If the stock can blow through it, test it, and then close above it, yes, then I would probably be long AEVA. So I like that stock. That's going to be my bullish pick today. Texas Instruments, let me review that one real quick. That stock actually pulled back, but it's been a weak stock. And you can see that gap right there is what is starting to fill. So I still like Texas Instruments. In fact, that's why I suggested that lottery trade last week, because it was starting to poke up above the 50-day moving average. It had lots of volume, and it should be able to fill in this gap. And I'm buying stocks that have been relatively strong recently, but that have pulled back. So I don't feel like I'm chasing stocks higher. And especially when it comes to tech stocks that have run really far in a short amount of time, you have to be careful buying those stocks, because they're way above their EMA 8. And the main reason, the market is not going anywhere fast. There's support. Sure, there's support. All of these little dips are when we can get a little bit more aggressive, but otherwise we don't want to chase, because there you've got a new relative high, whacka. You've got a gap reversal. So off of these new relative highs is where you're typically seeing some weakness. And so we'll probably poke up through this level here, make a marginal new high, not a gangbuster new high. What does that mean? What does marginal mean anyway, Pete? Well, if you look at that previous high and you draw a horizontal line across, you can see that the market barely was able to eke out a new all-time high. That tells me that buyers are not that aggressive. What you'd like to see is when you get a pullback like this, boom, shakalaka. Look at that buying. Now that tells you that the market's going to go much higher. Marginal new highs like this, that's what you see towards the end of a trend. So as the market or the stock break out, sellers are there. They're keeping a lid on it. They're smacking that stock. They have plenty of supply, and that's why the stock or the market can't lift off. But when you have this type of price action, it tells you that those sellers don't have any power at all. The buyers are in full control, and they are able to move the market higher with lots of pace. So be careful in here. The market doesn't look great. It doesn't look horrible. Everybody's expecting this rate cut in September. I believe the odds are up to about 85% now. So given what Powell said, he said, yeah, we're considering it. We're leaning that way. Yes, we're worried about inflation. The one thing that he had changed in his speech in Jackson Hole was he admitted that the inflation concerns could be a one and done. There's going to be a tariff adjustment, but he sees it as transitory as opposed to being persistent for a long period of time. But you have to be careful with him, because he saw transitory inflation back in 2022 as well, and it ended up being pretty dang persistent. So until the Fed cuts in September, there should be a good bid to the market. And I'll also put another little caveat out there that typically the market tends to rally after the Fed's first rate cut for about 2 months, 3 months. Well, that would put us into a little bit of a grind higher into year end. But the bigger issue with that is that the Fed is cutting interest rates for a reason. And the reason is that they see economic conditions slowing down. So once you get into the second rate cut and the third rate cut, now the tone changes dramatically. And the tone changes to, uh-oh, the rate cuts aren't helping. Uh-oh, the economy is still faltering. Uh-oh, did the Fed wait too long? And then you start to see a market decline. But you have to have a number of poor economic reports consecutively 2-3 months in a row. We haven't seen that. Everything that looks bad, and the news hasn't been great, the backdrop hasn't been great, but that promise or possibility of a rate cut has kept a strong bid to the market, and it should continue to do so at least for a couple of weeks. So your pick today is AEVA. I like this stock in particular. I like selling those out of the money puts, and look at that baby go. Even when the market was down today. Market down, stock opens up, continues higher. Yeah, baby, this is the kind of stock that we want to be day trading, especially once the market confirms support in here. So be careful chasing in here. Stock's getting a little overheated, get a little bit of a dip, set alerts, and that's going to be your entry point. So the way you do that, click there, stock pulls back there, I'm interested, maybe it pulls back a little bit more, gets down to VWAP, set another alert there. These start to trigger, you evaluate the dip. Is it brief and shallow? Yes. Going to be a good entry point. Is the market still looking good? Yes. That's how we day trade. Thanks so much for watching. Please subscribe to the YouTube channel. I'm trying to reach as many traders as I can. It helps me elevate my ratings. It helps me reach more traders. Also, please give the video a thumbs up, and we will see you Sunday. I'll be doing another video then. Actually, I'm going to be doing a video Monday because this is a holiday weekend. Have a great holiday. Look for that video on Monday. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.